About a month ago, I made a video analyzing the possibility of Tesla going back to a 150 level. Back then, the stock was about $200 per share and a lot of people were very excited for Q1 earnings. Now that the stock actually went to a 150 level, there's a little bit of talk about the stock actually going to a 100s or even below 100s. As the only person who was talking about the 150 level other than obviously Tony Sacconaghi, I want to analyze the reasons why I don't think the stock actually will go to 100 or even below 100. And to understand that scenario, let's look at what happened when the stock last went to 100. So as we discussed in previous videos, Elon was the first one who started selling, and obviously he's been selling for the last year or so, and he sold a grand total of about $40 billion worth of stock, which accounts for about 10% of his whole stake. Now this is obviously pretty significant, and this is the major reason for why the stock actually went down. Other than Elon, we also had T. Rowe selling out of their whole position, so 100% for them, and this accounted for about 50 million shares, with our worth about $6 billion worth of Tesla stock. And last but not least, we had Capital War investors actually selling out of 50% of their whole position. Now this is very meaningful, and it constituted about 45 million shares, which was worth about $5.4 billion. Now with all these major players dumping on retail, no wonder why we actually dropped to $100. So let's look at Tesla ownership breakdown at this point in time. And we have obviously Elon with about 13%. Notice that Elon doesn't have that much left to sell, and he said that he won't sell any more shares until 2025. Now we have retail and big investors that are individuals, right? Like these are not institutions. And retail is about 40% of the whole ownership. And we know these people are very diamond hands. They do not sell that easily, especially for Tesla stock. So what we have left is institutions, obviously, which are also about 40% of the whole ownership, maybe a little bit more than that. So let's take a look at the remaining top institutional shareholders. So Vanguard Group, BlackRock, State Street, and Geode Capital, they're all passive. So these are passive investors, and they do not sell or trade out of their whole positions. They just hold money on ETFs and institutional instruments for retirees and 401ks. Now obviously we have Capital War investors, but you notice that they don't have as much as they used to because they sold 50% of their whole position. I think a little bit of the drop that we experienced in the last couple of weeks has been Capital War investors selling a little bit more, but we will know until a couple of weeks. FMR and Norse Bank Group, these are also passive investors. Vale Gifford is active, but if Vale Gifford didn't sell out of their position in Q4, I doubt that they're gonna sell now. Last but not least, we have Northern Group and JP Morgan, but I think they just hold stock on behalf of their clients. They would also be considered passive investors. So if we look at the drop, we see that Elon started dumping here, then T. Rowe, then Capital War investors. And as you can see, we didn't bottom until $100 per share. But this drop right here doesn't look anything like it. This seems like a little bit of a repricing in terms of margins. And that is one of the reasons why I don't think we are gonna revisit this $100 per share. We just don't have the sellers to take us there. The second reason is more of a fundamental reason, because as we saw in terms of Q1 earnings, they came in bad, but they didn't come as bad. Yes, they were not as good as Q4, which was a record-breaking quarter, but the long-term trend is still pretty intact. I don't think we're gonna see more of the panic selling that we experienced last quarter, because I think Wall Street already repriced margins. Another fundamental reason is that revenues are actually pretty intact. If you see, the whole revenue trend is pretty good. If you see some of the charts that we have for some of the Chinese players, you'd be surprised. This is actually a pretty good chart. We have Mobileye dropping 20%, BYD dropping 20%, XPeng dropping 50%, and NIO we don't have yet, but every single one of those players are dropping sales left and right. And here's Tesla, very strong in terms of sales. So again, I don't think Tesla revisits the $100 per share level. I think it is possible, but it's very, very unlikely. So the same way that I thought analyzing the 150 level could happen after earnings, I still don't think that we're gonna get to 100. And can we drop? Of course we can drop. I just don't think we drop below 100 or even get close to that. There's a reason why we came back from 100 level so strongly. So anyway, I hope you enjoyed this little segment. Thank you very much for watching, and I'll see you next time.